Did the San Diego real estate market just cool off in the beginning of summer? In today's video, I'm going over everything on why we're seeing some price softening, what I'm telling my clients to expect, and let's go ahead and get started. My team and I hear from people just like you all the time saying they're making the move out here to San Diego, and we absolutely love helping them. So if you're thinking of making the move here to San Diego in the next few weeks, months, or even in the next year, go ahead and give our team a call, send us a text, or shoot us an email. We would love to help make this move out here to San Diego as easy and stress-free as possible. Okay, so here in San Diego, we have noticed some softening in the market, which is unusual. Usually San Diego is a very seasonal market, and summer is our busiest, hottest time. Spring and summer is our hottest time for people to buy and sell. But there is a lot going on in the market. Let's get after it. So first of all, we've had a lot of ups and downs throughout this year, with Fed saying that rates are going to be cut several times. More recently, they had just come out with a report saying that they are only going to drop rates one more time in 2024. So already, just with this news, hosting open houses, I've noticed a lot less optimism in buyers. Buyers are having a really hard time that we've recently hit all-time high prices, and they're still having to deal with low 7% interest rate. So this is something that's been really, really tough, and affordability is really, really lacking. So yeah, let's kind of jump in to some numbers. So first of all, in May 2024, that's what I have numbers for. So builders their confidence have declined for just the first time since November of 2023. So there's been a lot of optimism from December up until April, and then in May, with new inventory, home builders' confidence has been. So for the last 2 years, while interest rates have been going up and down, we've still been able to keep prices relatively steady because inventory has been so low. There's been times where it's been really hard to even email over a property to clients that fit their criteria because wasn't a lot on the market. In May, we've experienced a lot more inventory hit the market. So let's see. So supply increased by 40% for detached homes here in San Diego County, and it increased 61% for attached homes here in San Diego County. So all of a sudden, there's been a surplus of inventory in San Diego. So more inventory mixed with higher borrowing costs and home prices that have accelerated to new highs with the new inventory has really softened prices, with interest rates being at low sevens, and then for buyers having to deal with that kind of rate, plus having the news that the Fed said they're only going to cut rates one time at the end of the year. This put a lot of buyers on the sideline. Early March and April, there was a lot of excitement for buyers that rates were going to continue to be cut several times before the end of the year. And this optimism had a lot of buyers out shopping. Open houses were really busy. In the last few weeks since the Fed made this announcement, open houses have been a lot slower. And yeah, so it has a lot of people sitting on the sidelines. So this mixed with the flood of 40% increase in supply has really caused some prices to soften here in San Diego County. Now, I want to illustrate these points by a little story. So, a neighborhood that I work in San Marcos continuously is called Old Creek Ranch. It's a great community and it is right off the line of Carlsbad, right before San Alejo Hills. People love it. But anyways, videos on that. I want to tell a story because it's a neighborhood that I keep a really close eye on of what we've experienced. So in April or end of March, beginning of April, a home was listed for $799. And this at the time seemed absolutely wild because the record high for the neighborhood was in June 2022 when rates were still in the threes, somewhere at 1,710. So all of a sudden we've had low inventory, kind of hard to keep a gauge on where prices are at. And anyways, this home comes on the market for 1,799, and they ended up getting it, which was the new record for the neighborhood. Then another one came on, and mind you, during this time there's usually only just one home for sale in the neighborhood, maybe two at most. Another home came on the market, and originally it was listed high in January. They kind of toyed with the pricing. Eventually ends up selling for just a little over 1.8, and this closed in May, the very beginning of May, meaning it went under contract sometime in April. So then this home closes at 1.8. I think some homeowners that keep a close eye on the market noticed this. All of a sudden, there were overnight 3 homes for sale that came up on the exact same street. 2 of them were listed at 1,799. And there was one that was listed at 185. Now, mind you, I guess one of them was on the market maybe 3 weeks prior, but then the 2 followed for 1,799 and 185. So, and this was all cocktailed somewhere in there. The feds did the announcement that they're not going to be making several rate cuts before the end of the year, that they're only going to make one. So apparently it seemed like one of the sellers really needed to sell because after a month of it being on the market for 1,799, they lowered their price to 1,699. Apparently didn't get any offers because then they quickly dropped again just a few days later to 1,599. Meanwhile, the home literally next door for 185 still on the market at 1,599. Must not have gotten much action because then a few days later they dropped to 1,549, and at that point it went under contract a few days after. But yeah, this is a home that was comparable to the homes in early May and in late March that closed at 1,799. Now, the other 2 homes, the one that was originally listed for 1,799, it had some price cuts to 1,77 with apparently no action because they actually took it off the market and have it listed for rent instead. Meanwhile, there's still a home for 185 on that same street. And then an additional home came up for 1,799. So the home that's listed, there's currently a home listed for 1,799 and 185. But yeah, and one home that gave up trying to sell because maybe they really wanted to hit that number of 175 or higher. So now they're renting. And then the other one that price cut until 155. So that's just a quick example of what that neighborhood experienced, just inventory flooding the market way more than what we're used to. Like I said, in years past, had such low inventory that that's what continued to keep prices stable or rising despite having higher interest rates than buyers were accustomed to. So yeah, and just to be clear, I don't think the sky is falling. I don't think this is a 2008 issue. In 2008, there were lending issues and a dramatically oversupply. I feel like we're experiencing normal supply here. It's just been for so long we've had such little inventory that prices were able to maintain and rise at these higher rates. Um, so yeah, and then another thing that buyers are having to deal with is not only do they have the interest rates and in spring maybe hitting all-time high prices, we're seeing those soften again, but they also have the higher cost of home insurance out here. What what once used to cost maybe 1,500 a month to insure your home, sometimes now that's 25 to 4,000 a month to insure a home, depending on where it's at. So with the high fire hazard areas, buyers are dealing with that. So overall, it's just homes compared to 2 years ago are 44% more expensive now in 2024 than they were in 2022 when rates were at a three and home insurance wasn't such an issue. So, yeah, I think it totally depends on each buyer. If they can wait on the sidelines longer, that's fine. But there's also the balance of maybe waiting too long on the sidelines, because I like to think of the higher interest rates being like a bubble around the homes. And we know that there are a lot of people sitting on the sidelines to purchase a home. So as soon as the Fed starts giving more optimism that rates are going to cut more often, maybe the early of 2025, you can imagine how quickly buyers are going to be entering the market again. And we don't know if we'll have what kind of inventory level we'll have. A lot of inventory people have been putting off selling for a long time because they didn't want to deal with adjusting to a new interest rate. So if inventory is low in early 2025, when there's a lot of optimism of the Fed saying that they're going to be cutting the rates multiple times in a year, then we could see prices go up quickly again. But yeah, right now, kind of in a little bit of a limbo with the extra inventory on the market and more buyers sitting on the sidelines because affordability is so tough and they no longer have that optimism that feds are going to decrease rates multiple times before the end of the year. So I would love to hear down below in the comments what you think. Do you think now's a good time to buy in the San Diego market, or would you be waiting until the fall or winter to see what the Fed says they're going to be doing with interest rates?